So I think we're live. Josh, how you doing?
Good. It is. We're at the opposite ends of the world.
Yeah,
I'm
we
in my.
finally
I'm in
managed to get
my.
this together.
I'm in my man cave. So it is. It is dark. You can see the red light for the red day. But no, we're
Yeah,
good.
all good, all good. And just for those that are maybe unfortunate and haven't come across your stuff before, can you give us a brief introduction as to who you are?
Sure. Yeah. Got into crypto in 20. Well, got into Bitcoin. Gotta remember. I gotta read the room. Where am I?
Yeah.
Got into Bitcoin in 2013. Didn't know anything about finance. Didn't know anything about trading. I took. There was one. It was like a after school extracurricular course that was like finance focused that I did in like middle school, but I didn't like stick with it. In hindsight, it would have been amazing if I would have. But anyway, so yeah, no knowledge of any of this stuff. And figured out Bitcoin a little bit in 2013, went down the rabbit hole as one does, and just thought it was super cool. Thought like, yeah, I wasn't in it for the money. That's for damn sure.
Yeah.
Back then, it was super volatile. There was a lot of drama constantly. There's a lot of politics. There's a lot of just different avenues of life that it touches. CJ Wilson likes to talk about how like it's an octopus where it has like eight tentacles that just are everywhere all the time.
Yeah, yeah.
Um, so started talking more with people online about Bitcoin and trading and got connected with those types of communities. And I don't know how the content stuff started because I'm not somebody who's like, yeah, look at me. Like I'm not an influencer type person at all. So yeah, I don't know how that even started, but I think it started because there wasn't really anything. I think I started the YouTube in like 2016.
Yeah,
There
I
was
was gonna say, sorry, I came across your stuff probably mid 2017, just for your educational stuff, because I'll admit I was one of these people that first got into crypto as like a get rich quick scheme, and the educational content at the time was basically, oh, it's going to go to $1 million. All you need to do is buy and wait. And I obviously got burnt quite bad in that 2017 bull run, thinking that I was a genius, and then the market humbled me quite violently, we'll say. And then obviously, as I delved deeper and found content from people like yourself that is doesn't leave too much up to personal interpretation, doesn't have just wild speculation. It actually has some strategy and regimen to it. So I really appreciated that. And sorry, I interrupted as you were saying why you actually got into content creation in the first place. But was it kind of because of that? There wasn't anything available at the time that really provided that genuine educational content?
yes, I was consuming Bitcoin stuff like voraciously, like Andreas, James D'Angelo, who doesn't even do uh Bitcoin stuff on YouTube anymore, unfortunately. He had amazing stuff. Tons of people. And there wasn't a lot of trading stuff that I came across. So maybe I just felt like there was a void there that I could fill or help fill, or I don't know. It was something I was thinking about all day long and talking about in any of my waking hours with anybody who wanted to talk about it. So that's maybe how that all came to be. And then um, I kept trying to get into medical school throughout all this time as well. I just couldn't. I couldn't get in. My grades weren't good enough or my scores or whatever. Um, didn't end up happening for me. And crypto took off in 20 Bitcoin. Sorry,
Yep. We can talk
Bitcoin.
crypto. It's not,
But
I
see,
know we're looking to Bitcoin, but we're
yeah,
aware
but
there's other things.
when I say crypto in my head, I think of it as Bitcoin.
Yeah,
Something
yeah,
we'll talk about this later, but
yeah.
something that's super important for Bitcoin people is to actually know what all the shitcoins are and do, because that to me strengthens the argument for Bitcoin. There's nothing like it out there. There's nothing that even comes close. Um, anyway, just started doing more content, got connected with media companies, Brave New Coin, did some prop trading under them. What else did we do? Worked for Valkyrie year and a half, and now we're here. We're just trading, just trading and doing content, kind of our own thing.
Yeah. Good stuff. Good stuff. So I
Yeah.
predominantly wanted this discussion because there's not too many traders, specifically more short-term, medium-term Bitcoin traders that have stood the test of time for this long. You've been in, did you say, since 2013? It's mightily impressive, a decade
Well, I got in like
trading
you did.
Bitcoin.
I got in
Yeah.
like you did, thinking, I was a genius, right? At the top of the bull. Everybody buys Bitcoin at the price they deserve. So eventually, like, people come around to it, it takes whatever it takes. And that's same for me. I saw it run up from like 500 to 1,000 in 2013 and finally pulled the trigger around Thanksgiving in 2013.
Nice, nice.
And
Nearing the anniversary, a
yeah,
10-year anniversary. Nice.
we are, yeah. But I was aware of it slightly before then through like Slashdot or some online media publication thing. I can't remember what, but anyway. Yeah. So
Yeah, yeah. I think
that's
I
how it
was the
all started.
same. I'd heard of it, but until you actually see price start rapidly increasing and you think, oh, why didn't I get into this sooner? And then obviously you get in too late. And then the next cycle comes around. And if you stick around long enough, you can try and capitalize and learn and educate yourself. And I think once you're orange pilled and you actually understand it's not just a vehicle for trying to gain trading profits, it's obviously that's a
Although
nice
that
part
is
of
an
it.
excellent,
Yeah.
excellent part of
Yeah.
it.
So one thing I was wondering, considering you have been in the space for nearly a decade, have you noticed the Bitcoin markets have evolved a lot? Do you think, especially kind of the price action or the sentiment around cryptocurrencies, what have you really noticed to be the big changes?
Yeah, I think they've changed a ton. Uh, all the volume historically was through Mount Gox, right? And that was the lifeblood of everything. That obviously disappeared overnight one
Yeah,
day. And, stuff had to take over. Coinbase Kraken, stuff had to go from out of the shadows into being regulated, at least in the United States. So that's changed. Where the volumes are at any given time has changed. It used to be Asia, Chinese volume focused. It was all about China, China, China. That's changed. As we transition into this like institutional focus in the United States, that's going to change the volume again. It's going to change the on-chain metrics, I think, a lot.
yeah.
On-chain metrics have changed a ton over the years. I think it used to be a much purer signal for me personally. Um, so I think that's going to change a lot. But it's definitely always different with each cycle because it's kind of new people each time, or new like geographic pockets of the world, or new levels of regulation. It's always
Yeah, yeah.
slightly different. And like for me now, the focus from week to week is the institutional global products. CoinShares puts out a great breakdown every week of like the inflows into these like ETPs or ETNs or ETFs across the world.
Yeah.
So that is a good like pre-proxy for what I think is going to be important come BlackRock time.
And
So
I'm
it's
assuming you
definitely
see
changed.
this trend continuing as institutional money comes in. Maybe it doesn't become this wildly speculative asset that sees wild volatile swings, and maybe we see it trend towards more traditional assets in terms of its price action. Or how do you see it evolving in the next few years after like post BlackRock Bitcoin, we'll call it?
Yeah, I mean, I hope it doesn't go the way of gold, where we have zero volatility essentially, or very, 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 very little. These days, we're seeing volatility in the bond market. We're seeing volatility in the Qs, S&P, British bonds, stuff like that. Like there's volatility everywhere, right? So I hope the crypto Bitcoin version of volatility never truly disappears. But I was kind of thinking, I think those products will have a limit up and a limit down. I'm pretty sure. As in any given day, like there will be circuit breakers or just trading will stop completely. So we'll see what that looks like. That has happened on the CME futures a couple times where there's circuit breakers. No weekend trading. So yeah, it's not 24/7. It's not weekend. It's not holidays, right? Like Thanksgiving, Bitcoin doesn't care. Bitcoin's open for business, right? So,
Yeah, yeah.
in some respects, it'll always be its own thing for that reason, right? It's literally 24/7, 365. Um, but eventually the institutional flows will probably take over, a majority of the action,
I wonder
the trend or
how,
whatever.
yeah, in the future, if we see this, 9 to 5 or just market trading hours, and we see big institutional trading volume, we see more granularized price action as there's just so much more capital in the space. And then come the weekend, come the holidays, come the middle of the night, we see these on-chain degenerates just trying to wipe out and liquidate institutional capital. It's interesting to think how that dynamic's going to work going forward.
Yeah, that's kind of what we have now, right? It's like, we have the weekends for the party time or
Yeah.
the degeneracy, or we have the pajama traders taking over, during off US hours. But you kind of see that in US legacy markets already. I think there's this great statistic where if you what is it, buy the close and sell the open, like you're up a X percentage better than
Yeah,
just
just
holding or something.
out of hours trading just seems to trend up. Yeah.
Yeah, yeah, yeah.
So with that, obviously, as someone that focuses more on the Bitcoin price action and as more of a frequent trader, I'm curious as to your opinion on where Bitcoin currently is. So obviously, we've had a little bit of a retracement to $35,000 ish, I think it was, and then a pump back up to 38. And as we're filming this now, it's 36 and a bit $1,000. But what's your view on the market currently?
Yeah, one thing interesting this year is we've had kind of like 3 or 4 periods of bullish, like spurts of bullishness, like,
Yeah.
and other than that, it's just been flat, sideways down, angry. And it feels like so far, this is just another version of that. Um, it does feel like this version of the excitement is slightly different because it's in anticipation of a news catalyst being the BlackRock ETF stuff, which should be approved this year, hopefully. Um, but it doesn't feel like 2017 did. To me, like I want to see a slow weekly grind higher. I do not want to see random days where we're just like plus 10%. That feels great in the moment. It's probably a
Yeah.
little bit
Yeah.
like heroin or something. But what you really want to see for the long haul, the long term, like you want to see up days, down days, grinds. You want to see back and forth trading, for the health of the trend,
Yeah.
because the faster you go up, the quicker you go up, the more likely people are to just take profit, right?
Yeah, of course. I mean, obviously, I wasn't around in the space as long as you've been, but at least to me, I don't know if you can see the screen. Actually, I've just started a screen share.
Yeah.
The price action is somewhat similar to what we may have seen in the transitionary period in sort of 2019, 2020, when there was just still no large inflows into the space. And we had these, again, really long consolidation, boring price action periods before mega spikes. And then you just kind of stare up. But I agree. Until we really see kind of post 2020 COVID dump where we get this nice kind of constant grind in, even if it's to the downside, at least we get some price action. Just anything that isn't 7 months of sideways would be nice to see. But I think it's probably fairly typical price action at this stage in a cycle, would you say?
Yeah, that is one thing that I have to keep telling myself. Like, I'm turbo bullish. I'm the most bullish I've been in a very long time. But at the same time, we are pre-having, they could deny these applications. Like things could get ugly. And if it's live by the ETF, die by the ETF, that's not a great place to be. Um, it's going to be a buy the rumor, sell the news type event a little bit too, I think. So you got to watch out for that. We have to dodge the whole global recession fears a little bit. We have to dodge election unease in the United States next year. So there's some things, we have to watch out for, but we do have the halving coming up in April, as you have on the chart there.
Yeah, so I was going to say, what impact do you think the halving event will have on price? Do you imagine we'll see a run up prior to the halving and a bit of a dump, just some volatile price action? How do you see that playing out?
Well, I think it's best for everyone to generally like have an opinion on things, and then take both sides of the argument, try to steel man either side. So I'll start with the negative case, which is having has never had an effect on the market. Okay. You don't have to believe this. I'm just saying, like, this is how some people think.
Okay.
Having's never had an effect. The supply has nothing to do with it. It's all priced in, as they say.
Yeah.
And the only important thing here is global liquidity conditions. So if, for instance, we print trillions of dollars in the United States or whatever, right? Then we should see bullish appreciation. So come this halving, we'll see what happens. We'll see if we get more QE type behaviors in the United States or globally to help push this up. We haven't really had much loosening of liquidity this year. We've had a little bit, sure, but we're still up, what, 130%?
Yeah.
On the year.
Yeah.
The other interesting argument that mindset makes is this is all just coincidental that the halving lines up with these liquidity injections globally, and we just got lucky that we lined up with that timing. And that could be the case. Look, we haven't had that many halvings. We haven't had that many cycles. There's no guarantee that this will continue every cycle. So I think that's a valid thing to think about. It's not how I'm positioning, but it's something to consider, right? So if, for instance, liquidity declines significantly between now and after halving or whatever, right? After halving, we just take money out of the ecosystem, which doesn't seem to be feasible or possible, especially after as much as we've tightened on the rates side. Maybe we don't have price appreciation at all. Maybe the halving comes and goes and nobody cares. But I think the halving is important for the attention aspect. Like, Bitcoin thrives on the attention, the volume, the headlines, people learning about like what the halving even means, right? Oh, this thing
Yeah.
declines every 4 years. What does that mean, right? That's different than any fiat currency ever.
Yeah.
So I'm of the opinion that yes, having of course matters. It's part of the whole game. It's one of the first things anybody typically says when they're teaching somebody about Bitcoin. It has a 21 million supply. It has a disinflationary issuance schedule, or however you want to think about that. And that is completely different than anything we've seen, arguably, probably ever at this point, right?
Yeah. Yeah. And we'll touch on the potential coincidental alignment of liquidity cycles and the halving event a little bit later. But just before that, you mentioned a potential recessionary impact if global traditional markets maybe have a long extended bear cycle. We see more recessions around the world in major economies. How do you think that would impact the Bitcoin price?
Yeah, so I'm not a macro person, but as in macroeconomics.
Yeah.
Since working for Valkyrie, I've had to quickly learn a lot of macroeconomic vocabulary and data points. And man, the macro people are just angry all the time. They're just so angry. There have been macro people this year who have been bearish the entire year in legacy, the entire year in crypto, and they cannot trade against the fundamentals. So if they think the fundamentals are declining, that is their position today, and they cannot trade what's in front of them. You can have a view, you can have an opinion, you can be worried and concerned, but this for me is where technicals take over and say, look, if we're making higher highs, that's all. What else do I need to see? I don't know. With some of these people, they're just stuck in this viewpoint that the world's terrible, everything's terrible. I'm not going to disagree. I'm just saying, like, look, the markets aren't trading like that.
Yeah.
So
Yeah.
sure, we might be headed for recession, unemployment rising, stagflation, inflation roaring back in the United States, like all this terrible, terrible stuff. Every day it's more headlines, right? Of look how bad this bond auction is. Look how bad Biden's meeting with Xi went. Like
Yeah.
it's never ending. And I don't know if it's political. I don't think it's just political. But I feel like it's a little bit politically motivated. But So yeah, it's hard to ingest all of that and think like, yeah, we're going to be fine next year, you know. So I do think we're going to run into some speed bumps. Much like COVID, the Fed is always there to step in. The Treasury, like whoever, the U.S. government, like they're always going to print more money. You know, that's all they know how to do. So if something blows up, what do? They print more money. You know, banks blow up.
Yeah.
What do we do?
And
We
I
print
think,
more.
yeah, I completely agree. And I think a lot of people see the stock market and traditional markets as parallel to large economies when there is a divergence, because at least a lot of people, and myself included, believe that people are just looking for the best place to park their capital. And even in spite of potentially bad fundamental factors or a bearish future outlook, if there is simply no other place to park your capital and you don't want to be eaten away by inflation, then putting some money into the stock market, into potentially Bitcoin and other assets, just makes sense to not lose your wealth. So I think this is why, especially during COVID, I mean, the world was shut down for a year and we saw stock prices just absolutely skyrocket. And I think that's just because, well, there's obviously some other external factors such as stimulus checks and whatnot, but where else are people going to park their capital when there's so much liquidity being printed and so much new inflows of money into the world?
Yeah, I mean, look at NFTs, look at meme stocks. It's the same concept, right? People
Yeah.
were people were bored. I don't think that's the only reason Bitcoin went up, but it definitely helped, you know?
Yeah.
Like
Yeah.
there's no way printing all that money didn't help. It clearly helped. It clearly helped that we also had having just before just after, right?
It was just
It's all like
before. Well, it was
it's all
just
like
after
blurring.
COVID 2020 dump,
Yeah,
and
okay.
then
Yeah.
just kind of before all the new liquidity came in.
It all kind of blurs together. The funny
Yeah.
thing is the 2016 having was also around a Bitcoin specific bearish event, which was the Bitfinex hack, where a few years after Gox blowing up, all of a sudden another major exchange loses a metric crap ton of coins, and the market wasn't in a good place then, you know, but they figured it out. They've, you know, issued this debt token, and eventually the market saved itself. But it makes you wonder what's headed for 2024, right? Like, are we going to
Yeah.
have a COVID type event in the charts? Not necessarily another like global pandemic, but you know, global recession. If you look at oil lately, oil is, despite two wars, just cratering. You know, so to me, that's saying that there is concerns for global recession or global slowdown. You know, Europe's in trouble, Germany's always in trouble.
Yeah.
um, so yeah, I do think that we are going to run into some interesting trading conditions for next year for sure. But I also think we've never had the opportunity for the types of flows that we're going to get, and we're going to see having decrease the issuance again. You know, so there's no better time to increase demand and decrease supply, right? I mean, it's that simple.
Basic economics. Yeah. So,
Yeah.
how would you say you kind of blend your fundamental analysis with your technical analysis? Like you said, if the charts are showing higher highs and higher lows, even in spite of potentially bearish news, that's still showing good things in the charts. But like you said, you still imagine there will be some speed bumps and there might be some potentially negative fundamental events impacting prices. But how do you try and combine them as best you can?
Yeah, for me, the technicals usually take over because that has historically made the most money for me, you know.
Yep.
So we can look at, like last night, I was on this Metcalf's Law binge. You know, you guys don't have it on your site, I don't think yet. You might, if you do, I can't find it. But
I'll write it
um
down.
also I was gonna send you a bunch of stuff.
Okay.
So I was doing these metrics, you know, and I was like trying to interpret how this even matters, if it matters. And I can pull them up. We can look at them, but I was looking at market cap and realized cap and active addresses and total addresses and new addresses, and you know, I was trying to see, is there a pattern here? Is there discernible data that even matters? Do ordinals just blow the idea of active address metrics out of the water because it's a different chain now,
Yeah.
arguably,
Yeah.
I don't know. We'll find out. But the Metcalfe's law stuff looks pretty good, I would argue.
Do you want to screen share?
Yeah, let me just close that. So ideally, you're seeing a lower Metcalfe's law. Rising Metcalfe's law signals overvalued position or overvalued network.
Yeah.
Um, over time for Bitcoin, so this is like the purest form of it. It looks at market cap and daily active addresses. Over time, you definitely see a general rise in the floor for Metcalfe's law.
Yeah. Yeah.
And I've put channels on this before, so I think that's one way to sort of work around that. The problem with like thinking about a store of value hodl network, if you will, and like Metcalfe's law for me, like I don't use Bitcoin every day, right? But I'm
Mm.
still very much a part of the network, you know. I hold a decent amount of coins and I believe in the network and I talk about it, right? That's not going to show up on this metric though, right?
Yeah.
So I do think it's important to look at. And you'll see, what we want to see ideally is price rising with Metcalfe's law flat or declining. And then towards the end of the run, if you look at like 2018, towards the end of the run, you'll get rises in Metcalfe's law like that. Towards the end of the run in 2021, same deal. But it's hard to for me, it's hard to interpret exactly how to read this from a trading perspective. Like maybe we put Z scores on this and maybe you massage it a little bit and you say from having to
Yeah. Yeah.
having, like epoch to epoch, you fix it a little bit. And then I was looking at the total address. So this is market cap against total addresses.
Yeah.
And
Again, you can
this,
kind of see some similarities in the topping regions, and obviously the floor is increasing. We're getting these higher lows, but it still is interesting to see kind of how much the network is being used compared to its valuation to give almost these fundamental signals.
yeah, I think these are useful in a sense that you want to see this base on Metcalfe's law as price moves into the bullish period of the market. Then it starts to get overvalued, arguably. It may give you some sort of like MBRV type,
Yeah, yeah.
oscillator. Maybe you cut off anything pre 2013, maybe you don't. I don't know, but it's an interesting metric to think about. And then I was looking at new addresses versus market cap in
Mm-hmm.
similar type of signal, even now, to see this declining with price rising. Maybe that's a bullish divergence. Maybe that's an ordinal effect. I don't know, right? Like
Yeah.
it's hard to really tell there yet because ordinals are so new, but it's still basically the same idea where we clearly hit some sort of arbitrary value here, and that's it.
Yeah.
But then I was looking at realized cap too, which is the price at which the coins have last moved on chain on average.
Yeah.
And
Basically the cost basis of all Bitcoin on the network.
right. So looking at that against the same uh, address metrics, I don't know if any one of these is in particular more valuable or I'm like trying to look for stuff, but again, I think it's bullish in a sense that we've like topped out here on realized cap. Maybe this implements the hodl values better. I don't know. This is the total value. I feel like there's something here. It's just I think it needs another layer of massaging the
Yeah,
values a
looking
little
at
bit.
the rate of change during the bull cycles, or like you said, dividing it into the separate epoch periods or something. But yeah, it's definitely something we can definitely look into including on the site, and I'm sure we'll discuss it a little bit more. Are there any economic metrics you're looking towards? like we said, you give a little bit more weighting towards technical analysis, but you mentioned oil prices cratering, potentially being a bearish signal for the future, but liquidity starting to increase would probably nullify that. Are there any other economic things you're keeping an eye on?
Yeah, I think the number one thing people need to know is the reverse repo facility for the United States. Um, when I first heard about this, I had to have it explained to me like for 3 months straight to even understand what the heck this thing was. So all it
Well,
is, it
I was going to say, so now you have to explain it to all of our viewers as if we've never heard of it before. I have a very basic understanding, so this could be very helpful for me as well.
yeah, so it's overnight funding for money markets, essentially. That's how I understand it. When money markets or similar vehicles have no place to put short term or are seeking short term yield, okay, they
Okay.
can do that through overnight reverse repo. And when rates were low, this was the best place to put your cash because there was no short-term US Treasury that was worth buying.
Yeah,
So
all
you're
the yields were zero. So
right, right. So you are getting a yield here. And now that short-term treasuries are at 5%, this is essentially moving from overnight yields to a longer but also short-term yield, if that
they're
makes
like
sense, right?
3, 6, 1 year bonds. Yeah.
Yeah, so it might be 2 weeks, it might be whatever, whatever it is, right?
Yeah. Yeah.
Um, and so what we've seen, this has declined by $1 trillion over the past like 6 months. And as the US is issuing more and more debt, um, they've issued it on the short end, which historically they've kept a specific percentage between the long and the short end. I'm not going to go into that, but the point is we've issued a lot of debt on the short end. All of this reverse repo cash now has a place to go. That's good news for reverse repo. The bad news is when this is completely gone and we're still issuing debt at the rate we are, who buys it? So it's going to be a very interesting point in time when this empties to zero. It's at 912 billion right now. When this goes to zero, what will yields look like? Will yields just skyrocket because there's just nobody to buy the debt? We'll see. So I think that's super important. I don't know how that relates to Bitcoin necessarily, but the
Well,
bond market
just general
exploding.
bullish market conditions. And if everyone's bearish and can't afford anything, then that's probably not good for Bitcoin. But with something like this, I know you mentioned before the potential for things being priced in, the efficient market hypothesis. Do you not
Mm-hmm.
think many people can look at charts like this and see the trend is clearly back towards zero? So at what point is this priced in? Or will it ever be priced in?
Well, so the thing is, you already have people like James Lavish, who's done excellent Twitter threads on this. You've had tons of people talking about the issues with the amount of debt we're putting out there, but it doesn't seem to matter. People are still gobbling up TLT, which is the long bond ETF, more so than they ever have. I think that's like hitting record volume. So those individuals, to me, assume that TLT price is going to rebound. I think that may happen in the short term. But again, what happens when reverse repo runs out? Now, reverse repo is short end, not long end. I get it. But as a whole, in aggregate, like what happens with the debt stuff? Because right now it looks like we're issuing all this debt with no penalty. But once the reverse repo runs out, yields rise, at least they should, arguably. And as they rise, being in risk becomes less and less attractive. So eventually there's some sort of tipping point where it just makes too much sense to not be in yielding, instruments like this risk free for like TradFi institutional, right? So it's definitely something to keep an eye on for sure.
Do you think the can could be kicked down the road once more and we could have reverse repo 2.0 or something else that's implemented by the Fed or whoever to prevent any big crash in the markets, and just tries to continue incentivizing investing and pushing prices even higher.
Yeah, if you know anything about like failed bond auctions, again, I'm not the guy to talk about this. James Lavish and tons of other people will do way better job explaining this. But if we start to hit points where nobody wants to buy our debt, the Fed steps in at that point, and we get yield curve control, where yields in Japan is an example, right? Where yields hit a level and they don't go higher, and the Fed just continues to absorb.
Right.
And we're issuing debt and we're buying debt, and it's just this like Ouroboros, snake eating its own tail type thing. And Lynn Alden is another good one that talks about this too. But yeah, that's not a situation I don't think anybody wants to be in, where we're just issuing debt without consequence, right? To me,
Yeah.
if we go into QE or soft QE or whatever you want to call it, yield curve control, that's a massive win for Bitcoin at that point, because we're just issuing debt without consequence and introducing a different type of QE into the ecosystem, right? We're just printing money out of literally nothing for no reason. So I do think this reverse repo is something super important to watch, way more important than the SPR. People are like, they lost their goddamn minds over the SPR.
Yeah.
Let me tell you. I think that is like such a back burner item, especially with oil coming down. I hope they fill up the SPR to whatever acceptable level that the macro doomers think it needs to be at. I'm sure they won't fill it to that level, they being the US government. But man, this is the chart people need to watch, not SPR. Okay, just forget about that. I think the US produces enough oil. I think we'll be okay. Like, yes, is it a problem not to have insurance? Sure. But this is way more important than the SPR. Okay.
Okay. So these are more, like we said, more fundamental factors that obviously this is on quite a stark downwards trend, but this is going to take months and months potentially to play out. How do you approach the market on a more short-term basis? Do you have a different strategy for potentially your long-term investing and your trading? Do you see them as two different entities, or is your short-term trading always more influenced by the long-term fundamental factors as well?
Yeah, so typically my allocation buckets are, long-term hodl, short-term, high octane, leverage type stuff, and then kind of medium term, not leverage, but spot. Okay, those are like my three buckets.
Yeah.
For the leverage stuff, I either like to see the bull trends that we haven't really had. We've really not had, arguably, like, yes, price has gone up. I get it. But this is not the type of price action you probably want to sit through in a leveraged position, because if you're not positioned size wise or price wise appropriately, you just miss the whole thing. And then what do you do for 3 months, a whole quarter, right? You
Yeah.
just sit in that position? No, you don't. So, this is kind of like a one and done, like boom, 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 snap, snap, snap. We get to these prices and then you're just watching paint dry for a little while, right?
Yeah.
So we haven't seen real deal bull run in a trend, right? We've seen price go up, obviously, but we haven't seen bull run type stuff. So I'd love to see that. I would love to see pullbacks that got bought up. If we look at Ichimoku Cloud, which is one of my favorite indicators.
Yep.
If we look at what the cloud is telling me, it's saying, look, we are overbought here, which happens when we go straight up in a week. Okay. And it's suggesting the increasing likelihood of the probability of returning to 32,000, even temporarily, over making higher highs. Okay. That's all this is saying. So for me, in my head, I'm like, okay, I'm not leveraged long. I'm spot long because I know we've got inflows coming eventually. I know we've got halving. We might have a recession. I don't care. Like, that doesn't bother me. But where I want to buy in the moment in the near term is definitely closer to 32,000. I might not get that, but if I do get it, I'll be super happy, right?
Yeah.
Like that is a great setup, great trade for me. Even if it goes below that, again, longer term, don't care, right? I don't think any of us care until like 2025 at this point, like
Yeah.
what are we worried about? You know, the upside risk here is so massive, even if none of it materializes. I just think your downside is zero. Your upside is what,
In,
250? Like,
yeah. I was going to say infinity long term,
yeah,
but I get your point. Yeah.
yeah. So like, there's people sweating over high leverage trading here. I don't get it. It's like, I just look, guys, like calm down, DCA, do whatever you have to do, and just forget about it, right? Like DCA and chill, whatever you need to do.
Yeah.
But I don't think there's a need to like over trade this because you'll get run over. I mean, this has been super ugly. Like, look at this, super ugly. This is like
Yeah.
Bart's on steroids. Bart's are prices that go straight up, hold for a little bit, and then go straight down. It's just been over and over. So it's not a it's not a type of environment that I enjoy. I know that the hyper low volatility people love this stuff. It's not necessarily my favorite trading environment, but
No, me neither.
um, yeah, it's ugly. It's very ugly. To spend what is this? To spend a week like making a rounded top, selling off, and then in one day like retracing, and then in one day retracing. That's just at that point I just sit out. I say, all right, let it do its thing. I don't really care anymore.
Yeah. So
But I think the goal, just to conclude, the goal here for people is don't get chopped up in this nonsense when you don't have to. Just DCA and hope you get a lower buy or whatever, like, and just go on with your life.
So would you say that's probably the primary reason a lot of traders lose out? Because I know a lot of people watching this, and I'm sure pretty much everyone involved in the Bitcoin and crypto space at some point will have DCA'd in and then seen on social media people making $1 million trading and think, oh, I can do that. All I need to do is up my leverage, start trading more. Do you think over trading is probably one of the number one reasons people tend to lose money long term with their short term trading?
Absolutely. Leveraged over trading, putting coins or money on an exchange that you think it's there, you think it's in your account. It says however many BTC or however many whatever, right? But you go to try to remove that from the exchange, and oh, you got to get KYC'd again or some other
Yeah.
nonsense bullshit excuse, right? So that's another great way people lose all their money. Um, yes, over trading 100% is a great way to blow up, using too much leverage, seeing people with their P&L porn, as it's known,
Yep.
that get super excited. I get it, right? I've been there, I've seen it. But yes, people need to get burned. They need to touch the stove. They need to lose money on leverage, and eventually you learn. And if you don't, you just keep blowing up and you never make money. But uh, eventually people learn, and then
Yep.
they stick around.
So for your much simpler long-term Bitcoin investments, and maybe some
Mhm.
of your shorter-term ones too, what are your favorite on-chain metrics? Are there any you look to specifically? I know you mentioned the MVRVZ score. Are you looking at, I know again we mentioned kind of active addresses and stuff like that. Any others that you really like?
Yeah, I wish hash rate had a signal. I just don't think it does. I know a lot of people say maybe longer term. This isn't the question you asked me, but
Okay.
I hear a lot of people talk about hash rate, and it's great for the network that hash rate's increasing. I just don't think there's like a specific tradable signal there. Um, but yeah,
There's the hash
MVRV.
ribbons, I think, that are okay, but the signals are fairly infrequent and yeah, it's an interesting one for sure. And it'll be interesting, especially post halving, if we do get a decrease in the hash rate, notably because just the profit margins for miners potentially reduces massively. But I think that's a decent signal. Historically, it's been pretty good.
Yeah, hash ribbons is better than vanilla hash rate for sure, and it's definitely one I've looked at frequently. Um, I remember looking at it the other day and seeing 28 was the level on TA that was super important, but hash ribbons even said like earlier we were good to go. But yeah, so hash ribbons is a good one to keep in your list if you're a listener of
Yeah.
things to just randomly check every once in a while. Yeah, no, it's good though. It's one of the better ones for sure. My favorite is definitely MVRV, but the problem is in the middle of a cycle, like I don't have a great read. Now is a great example. Like we came off the bottom, it sniped the bottom arguably perfectly. It sniped the top perfectly, arguably. Now what do you do, right? You have this
Yeah.
awkward middle period where we can draw horizontals and stuff and scribble on this, but it's hard for me to know what this is telling me. Like similar to that Metcalf example, like I think we do want to see rising MVRV over time. We want to see unrealized profits, gathering in the ecosystem as people don't cash out but are holding. So I do think seeing MVRV rise throughout a cycle makes sense. But like 2016, we want to see that super slow. We
Yeah.
arguably you don't want to see that like 2020, where it was basically like in a couple months that was it, right?
Yeah, if
Almost too much.
anything, yeah, the longer it takes, the more upside potential we have of it kind of coiling in and not just bursting super quick. So I agree. If we need to see a nice long drawn out upside, then that would be much more preferable. But like you said, now that we're kind of in between, especially I like to refer to the Bitcoin investor tool, which we have as maybe a clear definition of when we're in a bull market or when we're in the most opportune moments for accumulation. But now we've actually crossed that. Many people maybe don't want a dollar cost average in, seeing prices 100% higher than what they were just a few months ago. Do you have any advice for what people should maybe try to do? I know you said over trading definitely isn't the route. Do you just think trying to load up on any pullbacks we get? Do you think just simple dollar cost averaging, regardless of price? How are you going to maybe approach your longer term accumulation going forward?
Yeah, so not investment advice for
Yep,
anyone
of
listening.
course, of course. Yep.
um, but I think it's important to have allocation buckets. Everybody loves to gamble. I'm not really personally a gambler, but I know there are lots of people who do, like, sports betting and all this other stuff. So have your allocation buckets that make sense for whatever you're trying to achieve long term. For me, that's like 50% of my stack is a permanent hodl. The other 50% is trading. A smaller chunk of that is leverage. Smaller chunk of that for people could be meme coins. Do whatever you want to do, but you
Yep.
don't just throw your stack constantly at anything, like a dog chasing a car. um Something else I do, I'm still DCAing. I still think DCAing makes sense to me. We're still quite low on the 2-year MA multiplier, which I also love, and I first saw on looking at Bitcoin. So, there's still a ton of upside in this. And if this is a slower trend, eventually this is going to turn up and continue rising. So I see nothing wrong with DCAing, a smaller bit every week at all. That's a perfectly fine strategy to me. As far as like the pullback stuff, I'm looking at the cloud, I'm looking at horizontal levels, whatever else makes sense. But um, DCA, totally fine. And you guys have like what, the rainbow? People think this is a
Yep.
meme, right? But it's not bad.
It's worked
You
pretty
can
well. Yeah.
talk shit about something like this all you want, but at the end of the day, this thing was created in like what, 2013 maybe.
I remember seeing it was like a black background. Someone did it on some looking to some weird forum, and it just mapped out decades in advance. I remember seeing that in 2017 from when it was initially made. I think if you actually scroll down on
It was
this
Bitcoin talk,
chart,
right?
yeah, maybe it was. Yeah,
Oh,
there we go.
here's
Exactly that. I remember seeing that years ago when it was first made, and then
2014.
yeah, so I must have seen it in 2017. I was like, wow, this is still absolutely spot on for something again nearly a decade old. I mean, it might need to be fine tuned a little bit, of course, in the future, but it's still doing pretty good.
Like, is it perfect? No, but it is good enough to me, right? Like, look, we're still arguably in oversold territory on this thing. So yeah, I think dollar cost averaging is fine longer term. taking a long time horizon, I think typically we've topped out like what, a year after halving. There's been
Yeah.
this weird time period. Do you guys have like the full price on here?
If you go all, I mean, it's not logarithmic, but yeah.
Okay. Um, so
The
from
stock to flow chart might be a bit better actually, because then that'll show post halvening about how long it takes.
okay.
Yeah, but yeah, I think it's about 12 to 18 months post halving. We have our cycle peak typically.
Right. And there's this other weirdness where from cycle low to cycle high, the past two cycles, it's been exactly 1,064 days. So you can also use that as a tool, as a sanity check throughout the cycle, right? Like the low is probably in for this cycle, probably, right? So if you measure whatever, what was that, November 12th or something,
Yeah,
to whatever 1,064 days out is, then that's probably pretty close to the next cycle high, arguably,
pretty
right?
much 3 years, pretty much Q3, Q4, 2025. That lines up with most things again that we're kind of forecasting based on all the metrics currently, which I mean it'd be amazing if it's been that simple all along. I mean, one of the metrics we have that last cycle, I even was watching it every day. It's the pi cycle top indicator.
Yeah.
It's almost too simple for its own good and too accurate for its own good. It is literally just two moving averages that have called the top pretty much to perfection every single cycle. It's absurd that it's been this accurate, just two arbitrary lines. But again, just another one that I think people definitely need to keep an eye on. And if we do get another cross occurring, man, historically you can't argue with the accuracy of this.
Yeah, you can't. You can, again, you can think it's as somebody who comes from like science and hard numbers and analytics and that stuff, like, look, I know this is all like chicken bones and tea leaves, right? But
Yeah, yeah,
but it is what it is. If it makes you money, if throwing a hacky sack against the wall makes you money, I don't care, right? I'm not, who might argue, right?
yeah.
So yeah, I think it is worth considering. It's going to be interesting to see how many of these metrics potentially break relative to the new type of money that's coming in. Potentially, you have to tamp down expectations a little bit just in case it doesn't happen. But assuming it happens, I think a lot of the on-chain stuff's going to break, because we're just not really going to see the on-chain stuff.
I
The
think,
hodl. Go ahead.
yeah, I think a lot of them might just need tuning to account for the decreased active liquidity. So I think the hodl wave's a good example of this. And I just tweeted about it the other day. We're now above 70% of Bitcoin that hasn't moved in a year. That obviously changes the market dynamics of the ecosystem quite substantially when so little is moving, and especially as we get more institutional demand coming in. I can only see this 1 year hodl wave not increasing indefinitely because I still think it'll be very cyclical as we get rapid price increases that people obviously start taking some profit. But I think we'll continue to see higher and higher lows on this. So maybe we just need to adjust on-chain charts to account for the decrease in that. I know we also have a few metrics that take into account the amount of days that Bitcoin has actually been around for, which again kind of adjusts the data for the market maturity and how much it's grown. So I think a lot of them might just need tweaking in the next 5, 10, 20 years, whenever it may be. I still think for this cycle, we haven't quite crossed the point of no return in that Bitcoin as an asset has fundamentally changed from this peer-to-peer currency potentially to this more institutional store of value.
Yeah, I think that's right. I think this cycle um, will be the first one where you can actually see certain things break if they break, and then the subsequent cycles after that, if we have whatever, however many cycles, I think it's just going to get harder and harder to see this stuff on chain without really digging into the chain analysis and seeing like, oh, this is the Coinbase wallet or this is the BlackRock ETF wallet, right? Like, I think it's going to get harder to figure all that out for sure.
So you mentioned before that you usually allocate 50% just to Bitcoin holdings, even as someone that's an active trader like yourself, and then you have a smaller portion for trading, and then maybe an even smaller portion for leverage and other meme coin NFTs, whatever you're trading. How would you recommend others to manage their risk, specifically from a trading point of view? Would you say to only say allocate 10% of your portfolio to trading and then only risk 1% of that per trade? How would you go about managing your risk better for people that maybe want to trade a bit more actively?
Yeah, I think setting parameters for yourself is a great idea. The first thing that most people need to do is get their tuition and lose a bunch of money.
Right.
There's nothing that will help you learn faster than losing a bunch of money.
Yep.
For most people, right? Like they lost money on Gox. Some of them didn't learn. They lost money on FTX. They lost money on BlockFi, Celsius, wherever else. The same principles applied for Mt. Gox that applied for Silk Road, that like all this stuff is the same, and it's just your obligation or your opportunity to listen or not, right? I haven't lost a single Satoshi on Cryptsy, on Cryptopia, on Gox, on whatever else, FTX, what else? BlockFi, Celsius,
Celsius. Yeah.
Luna. Like I was smart enough or dumb enough or lazy enough to realize like that is all siren song fugazi nonsense. Okay. So if that happens again this cycle and people still lose money, I don't know what to say. It happens every cycle. So
yep.
the custodial risk portion of it is something that you can easily control yourself. Okay. With a hardware wallet, right? That's the first thing. The counterparty risk, or let's say you're in DeFi and you're trading Bitcoin, or you're using leverage or whatever, right? One way to mitigate against that is to not put an entire stack on an exchange or into DeFi. Use leverage appropriately, but size it to a degree that makes sense. And that way you don't have to put your entire stack at risk, right? I'm not putting my entire holdings into an exchange or into DeFi ever, because I just don't need to do that, right? If I can use leverage, or I can trade with decent size, trade X percentage each trade, whatever it is, what works for the trader.
Just to quickly intervene, for those
yeah.
people that maybe hear you say use leverage appropriately, because a lot of people's first experience of leverage is, oh, Bitcoin moved up 1%, but if I was on 10 times leverage, I'd have made 10% profit. Why don't I just leverage everything? Can you explain how to appropriately use leverage and what its genuine, useful purpose is?
Yeah, you're right. So most people leverage is for poor people. That's a common way to just level set. Okay. For most people, they use leverage in the sense that like I don't have a lot of capital. I want to increase the amount of capital I'm playing with, which is fine. But because of the volatility in crypto, like people love to go 10x, 20x. You'll see stories and see tweets of people doing amazing. A lot of that is survivorship bias, or just, fake. It's just flat out fake. For me, I found 5x is plenty. It is plenty of leverage. Okay. No matter what the size is, 5x, totally fine. 2x is even fine. There's a 2x ETF in the US called BitX. If you really want leverage, just trade that. You can't get liquidated. Okay. You can lose money. You can lose a ton of money, but you can't get liquidated. So, another thing I always do when I'm trading leverage, if the liquidation level is below, I'm famous also for like trading chart patterns or something, right? So if I'm looking at a specific level in a chart pattern, I make sure my liquidation level is above whatever the stop loss for the chart pattern might be, right? I'm trying to think of an example on Bitcoin recently. I don't know if I've taken a leveraged Bitcoin trade recently. That's the problem. But the point is, if you're trading a system, whatever the system is, and you have a stop loss level, don't let the liquidation price be your stop loss. Okay. That might sound obvious, but a lot of people just sort of hand wave it and say, oh, that won't happen, right? My stop loss is fine.
Yeah.
So if your stop loss is below your liquidation level, you're probably using too much leverage. If you're having trouble sleeping at night because you're underwater or you're in too much leverage, you're probably over levered, and you probably need to reduce that position or take it off the table entirely. You know, like being able to hold a leverage position throughout a trend or over multiple days is super valuable. And a lot of people can't do that because they're just so amped up on 20x, 50x, right? They're trading like day to day. There are successful people that do that, but it's just so much easier to not do that, you know? And
Especially like we said, given the long-term trend where we are seeing a near imminent ETF approval, there's a halving event upcoming. We're maybe seeing the turning point of a more fundamental quantitative easing, and we're going to see liquidity cycle turn back up again. All of these are pointing towards a considerably higher Bitcoin price in the medium to long term. So to potentially burn away all of your capital now intraday trading on the 5-minute charts with 50 times leverage is crazy to me.
Yeah, it's really it's self-sabotage if you're here to actually grow a stack and maintain a trading position over a longer period of time. It just doesn't make sense. You know, but some people, they just have to learn. You know, early on I got liquidated plenty. Okay.
Yeah.
But I didn't, I was dumb enough to know that I didn't know anything, and I was smart enough to know like I shouldn't be shoving all in every single position, right?
Yeah.
But some people just, they don't care. And hey, that's fine. I thank those people because they fuel the rallies, they fuel the dumps. But it's just sad to see when it doesn't need to be like that, you know?
Yeah. So you obviously said if you're struggling to sleep at night, then you're probably overexposed to the market. For people that are maybe, because obviously trading and investing can be quite an emotional journey. Obviously, if you're on capitals at play, you don't like seeing losing that hard earned cash. How would you say traders and investors can better control their emotions? Because if we look at something like well, even some on-chain stuff, the realized cap hodl waves, we can see people tend to come into the market at the worst time. We can look at the fear and greed index and say people are usually fearful at the absolute worst times. How would you say to best control your emotions for traders and investors in the market? Do you think you need to act as a contrarian to the market, act as a contrarian to yourself? How would you go about that?
Yeah, I don't think you need to be a contrarian per se. But again, it really helps to lose a bunch of money over and over again.
People are going to hate this advice.
Look, it's just that's how, unfortunately, um, that's how I learned. That's how most people learn, that you go through like 10,000 indicators or whatever. You're looking for the holy grail. You find it, it doesn't work. You find another one, it doesn't work. Then you start to develop your own system. It might work a little better. You might be losing, but losing a little less. And then eventually over time, you lose enough money, you're here long enough, you see enough charts, stuff starts to click a little bit. And that's where the magic happens, because eventually the good habits kick in, and eventually you stop buying the top and selling the bottom, right? Like
Yeah.
eventually. That for some people that may take 5 years, it may take a decade. For me, I was lucky that I did a lot of learning in the bear market periods of 2014 and 2015. So I was like watching every single TA, just traditional TA video I could. I was looking at all the websites for any TA information, learning about chart patterns, learning about trend, learning about reversals and bull bear, blah, blah, blah. So I think bringing all that together, synthesizing that, losing money, putting the time in, you know, that's a way to not do stupid stuff. So
Yeah.
that's what people really need to do. Because initially, like we both said, like we bought the top, right? As retail investors, that's typically what happens. That's what happened in 2022 with people. It's what's gonna happen in 2025 if we have another cycle, right? That's just inevitable. There's nothing wrong with that, but that's just the market, right?
Yeah. Yeah. So you said you just learn yourself by watching videos, reading books. How long do you think it took from kind of self-learning, obviously losing a lot of money, to being a point where you felt that click? Like you said, once you can be more in tune with the market, how long do you think that was? Because I know a lot of people, myself included, and I think pretty much everyone included, when they first get into trading and investing, you think, like you said, you can find the holy grail indicator, you can watch a couple of YouTube videos, and you're there. But how long did it actually take you to feel that click, to feel confident, and to feel really at ease with the price action and the swings and the volatility and the risk? When did it all come together for you?
So from the volatility piece perspective, it helps that I didn't have exposure to legacy markets at all. So I didn't
Yeah.
really realize that the volatility is on steroids in crypto. I didn't realize that that isn't normal.
Yeah.
So I became numb to that over a period of time. I know a lot of people, the volatility scares them away, especially from an institutional perspective. They don't know what the hell people are doing here with the volatility like this. But um, so that's the volatility. You just have to get used to it. It's, again, you have to be able to sleep at night, and you have to realize you're going to make money, you're going to lose money. That's part of the game. A lot of people can't do that. They can't lose money, and eventually, you get used to it. It's okay. But what really helped me, I think, is being here through a full cycle, in like seeing, for Bitcoin, seeing what a bear market really, like how ugly it gets during a bear market, and trading through the bottom of that bear market, and like seeing indicators click, seeing chart patterns work, seeing news events and how that affects price, seeing developers rage quit and how that affects price, like all this stuff. For me, it's like, oh, that's what happens when this happens usually. It's kind of like pattern matching. I'm a super visual person, so that's definitely
Mm.
helped me as well. If you're not visual, you may struggle with charts, but I don't think that's most people. I don't know. I'm super visual, so it's definitely helped me there. But it took me, I don't even know. Luckily, probably 3-4 years.
About a cycle.
Yeah. I wasn't longing the drop every time. That's another thing. Like a lot of people, they just assume that even now, like they've got bear market PTSD, where they're not holding, they're not in positions, they're not longing, they're shorting. Knowing what the trend is super helpful. Knowing if there's no trend is super helpful. And knowing where that pendulum swing happens, or having some good idea where that would happen, is also super, super helpful. So if you're not comfortable answering those questions, I wouldn't use leverage. I wouldn't go balls to the walls on size. You have to answer some of those basic questions first, for sure.
Yeah.
So I still see people today still shorting every pop. It's
Yeah.
just, I've seen people every cycle do that. They are not here anymore. Okay, like they do not exist. You last a cycle, and that's it. That's it. Like you're gone. You don't have money anymore. If you want to be that person, go for it. If you think you could be a hero, I'd love to watch it happen, but it's that's not how it works. So
Yeah,
I
I
wish.
think that's definitely a part of it as well, is that when you first come into the market and you look at the price action, and it's easy to say, oh, well, at this price, clearly we had experienced a 70-80% drawdown. That was clearly the time to buy. But to actually experience the emotion at that time, to see your holdings have lost value, to see the sentiment on social media platforms. And I know everyone likes to think that they're immune to the negativity, they're immune to the bearish fundamental events that maybe push down price. But until you actually experience it, it's completely different. It's very easy to look on a chart or to look at certain metrics and believe you would have acted in this way at this period of time. But until you experience a full cycle, the negativity of a bear market and the absolute euphoria of the upside bull market, it's hard to know how you as a person is going to feel in those circumstances. And I think that's maybe a portion of trading that's underestimated by new people coming into the space, in that anyone can have a very good system and strategy and potentially risk management in place, but until you can maybe emotionally deal with that and you've experienced a certain price action enough times, it's hard to put that into effect and be confident in yourself that it is going to play out long term.
Yeah, the knowing yourself sounds like super hokey and silly, but
Yeah.
it is 10,000% true, because man, you'll know what you're made of when you're losing or making X amount of money. There are no higher highs and there are no lower lows than trading, at least for me personally. Definitely. Um, and
So
I recommend people make a trading journal, take notes, like in a systematic way. Especially now is a great time. I was looking back at one of my videos from 2022 towards the top, and man, it was just so bearish and so correct.
yeah.
And like again, maybe it's voodoo, maybe it's timing, I don't know, but I was just going through it like boom, boom, boom. This is bearish. The on-chain metrics are bearish. The chart pattern is bearish. This is a double top. This is all these things. This is this on the cloud, right? So it was me like seeing my system in action in hindsight now, but at the time I didn't know it was going to be so right, so accurate. So that also gives me confidence for this cycle. Like, look, I was right. I have to trust myself. The system works, at least for me. So I know that those are the things I need to keep looking at, and those are the things that make sense. So yeah. Anyway, sorry. Go ahead.
I was going to say, and you kind of played into a bit there by what you just said, but everyone likes to remember and talk about their best calls, their best trades, their best investments when they bought the bottom and became bearish and sold at the top. Do you know what your worst trade was? Do you know the point at which you were like, wow, that was so bad. I need to take a step back and really understand what I'm doing, because maybe you lost too much money. Maybe you were too confident that price would continue increasing. Is there anything that springs to mind of that was terrible by me?
I don't think there's anything like super, super terrible. There was a time, so I bought a Chromebook for 3 BTC. Okay, that was probably my
Okay.
worst. That was probably my worst trade.
Yep.
I did that at like 320, but BTC was at 320. That wasn't a great decision at that time, but looking back on it, arguably, we had just popped off of a multi-month bear market. I was feeling a little bit of the wealth effect. Okay.
Yeah.
But from a trade perspective, that wasn't so great. Another trade that wasn't the smartest thing to do. I had a bunch of student loans that I paid off at, where did I do it? I don't know. It was like fresh all-time highs somewhere at like 2000. I don't know, somewhere in there.
Yeah.
Um, Not the smartest thing in hindsight either to do. But again, I was like, man, I just held this through X amount of years, right? Like I want to pay off some loans.
Yeah.
So, and stories like that are how you see the hodl waves slowly start to rise, right? As prices go up. Eventually, you hit a number for people and they have plans with that BTC. And my plan, regardless of where I thought price was going, was, look, I need to pay off these student loans. Um, so yeah, that also is kind of silly, but I don't think there's any like major horror stories from a trading perspective. Um, I'm sure there were times like OKCoin in 2014 or something where I was doing something stupid, but zooming out helps. Staying off the 5 minute whatever. I don't know how people trade on low time frames. Honestly, letting the
No.
market come to you. I'm talking about 32K. I'm not a popular person talking about 32K when we're at 36, but man, I'm gonna feel great if my bids get hit and we hit those levels. So yeah, you just have to be super patient with stuff like this.
Just
You
stick to the
can't
plan.
can't force it. Yeah, find a
So
plan and stick to it.
I know it, looking back, it wasn't the worst decision to take some profits. If you need to buy some things or pay off loans, that makes sense to do. What would be your recommendations in the coming months and couple years potentially for people to try and most effectively take some profits? Because obviously waiting for an MVRVZ sell signal and just unloading 100% of your position at the exact peak is what everyone wants to do. But how would you maybe recommend a more realistic approach to maybe scale out most efficiently? Are there any metrics you're watching for long-term profit taking?
Yeah, so I like the 2-year MA multiplier a
Yeah.
lot. The power law corridor is great. Um, any eventual reversal chart pattern that we see, head and shoulders, M double top, inverted Adam and Eve, uh, rising wedge, we kind of saw a mixture of all of that in 2021. I sold a bunch of BTC right here when we broke through the cloud, or we looked like we were going to break through the daily cloud. So that also helps, like having, basically it's a trailing stop loss. That's at the end of the day, that's what it acted as for me.
Yeah.
So I definitely like those metrics. Another thing to watch too is like, I don't know if we'll see it again, but in 2017, we saw just absolute crazy frenzy activity on exchanges with retail buying.
Hmm.
And that isn't typically, that isn't a continuation signal. That is the euphoric blow off top, right? That is
Yeah.
what everybody was sort of waiting for the last cycle that we didn't see. So it would be interesting if we saw it this cycle because we didn't see it last cycle. I don't know. But that's something else to watch for is, do all the exchanges go down, or are they going down every day? Like, does Kraken, Coinbase, and Binance have trouble? Are APIs messy? Our order books all over the place, right? Like, those are typically signs of the late stage in a cycle where there is just, euphoria. There's no
Yeah.
other way to put it, right? People are FOMOing like we did, and at the top, right? We FOMO'd. It sounded like you FOMO'd a little bit in 2017.
Oh
I
yeah,
certainly
without a doubt.
FOMO'd.
Yeah.
I certainly FOMO'd in 2013. I think it was somewhere around like 1100. I think was one of my purchases. But then I stuck around. I had a buy around like 250 in Coinbase in 2015. So look, even if you FOMO the top, you can learn enough to be here for the bottom of a cycle. But yeah, so those are the things I would watch. Sentiment obviously is a great gauge, and the euphoric, buying is one way to gauge that.
So this again kind of plays into the next point, because when I FOMO'd in, and I think when a lot of people FOMO in, they maybe hear about Bitcoin and buy a hundredth of a Bitcoin or something. But I was taken away by the fact that I could earn an entire Litecoin. So that was one of the things I did in 2017. It was like, wow, I can buy full Litecoins. And I think when we see altcoins really take off and Bitcoin dominance begin to really collapse, that's another good indication that maybe the market's getting a little greedy. But for these altcoins, other digital assets, ordinals, NFTs, we touched on it pretty much right at the start. Are there any others that you maybe hold long term? Do you like the tech of any of them? How do you think they impact Bitcoin going forward? What's your opinion on altcoins and stuff?
Yeah, so I think I'm comfortable trading them for more Bitcoin. So I know a lot of like Bitcoin maxis say just stay out of that stuff completely. And I'm not going to disagree with them that for most people, that's probably the better thing to do. Um, for me, I trade alts to get more Bitcoin, like full stop. I don't really believe in any of them necessarily. I think Monero's got great tech. I think it does what it does better than anybody else. It's basically a on-chain laundromat, right? It just washes all your
Yeah.
coins. um, the problem is you can't audit the chain, so you don't really know how much Monero is out there at any given time. So that's problematic. It does have a tail emission, so it's different from Bitcoin in that regard. But Monero is probably the top candidate for me of something that I like that isn't Bitcoin. So what you were talking about buying Litecoin instead of Bitcoin is called unit bias, and
Yeah.
one of the things, like how Doge took off, right? Like you can buy, you know, whatever it is, 10,000 Doge instead of zero point 0.1 BTC. You know, that's how stuff like Doge takes off. And I would argue that's how things like Solana and AVAX and all the other stuff that's taking off now, when Bitcoin's kind of quiet, the unit bias stuff is real, and it's definitely helped alts historically every cycle. So this cycle is no different. I forget your original question, but well, which
Uh,
alts do I like? Yeah,
yeah.
I think they're all shit. I mean, let's be honest, right? The thing about DeFi is like DeFi is super cool. The protocols work, they survive, they're anti-fragile. Is the attack surface massive? Yes. You have to be careful with counterparty risk and trusting smart contracts. Absolutely. Do I think most of the coins are worthless? 100%. Like none of those projects need tokens realistically.
No, no.
They don't do anything, you know, for the most part, um, and are just giant cash grabs. So I love hate trading stuff because then I know I trade it better. I don't hold on to it. I
Yeah.
never become a community member, you know. Um, so yeah, certain alts are really great for trading. And the other good thing about trading alts as a Bitcoiner is like, look, you can have more shots on goal at honing your system. You have to be smart with the allocation and the size and the risk and all that stuff. But you know, I'll trade Sol, I'll trade all this stuff. I don't care, right? You get to a point where eventually all you really care about is liquidity. You care about getting in and out of your position without a massive market effect. And if your system works, your system works. So there's some stuff I don't touch. I just don't even bother. But the big stuff, yeah, why not? You know, that's not a popular opinion for Bitcoiners, but definitely something I do.
But it is all with the on the premise that it's to flow back into Bitcoin or US dollar if you're taking profit or something. These are just short-term plays to increase your stack ultimately.
Right.
I
Absolutely.
think that's probably one of the biggest mistakes people make is that they become very attached, like you said, into communities of the next Bitcoin killer. And there are cool projects out there. Do they all need their own tokens? No. But I think the tech innovations they bring, even if they are, I like to see a lot of alts as potential test nets for future Bitcoin innovations, where maybe we see. I mean, I'm not the biggest fan of ordinals in their current state, but that functionality native to Bitcoin isn't a bad thing if we're improving, upgrading the network, and if in the future we have DeFi platforms solely on Bitcoin, that's pretty cool. If the Lightning Network continues to improve and expand and scale due to other altcoin innovations, that's great for Bitcoin. So I do think they certainly have their place, but for long term holdings, again, I agree with you that rotating back into Bitcoin should always be the priority.
Yeah, it's the safest of anything. It's the most battle tested. It's the most anti-fragile. It's the most regulatory approved at this point. You know, that could
Yeah,
change, similar to gold where they confiscated gold, right?
yeah,
If we get too big, that could be a problem. But yeah, I stay away from holding alts over multiple cycles. It just always ends in tears.
yeah,
I've seen it. I've seen it just absolutely destroy people that are holding alts through multiple cycles, thinking like, you know, this cycle my bag is going to recover and that's going to outperform, and it just gets delisted. And you know, it's like that's part of the game. You know,
yeah.
sorry. So
So
yeah,
with all of that in mind, if we can just click back to the Bitcoin chart,
yeah.
I know I have these questions of what's your price prediction for 3 months, 3 years, and 3 decades, but I'm going to slightly alter that. So rather than 3 months, we'll say at the Bitcoin halving, which is 4 months or something. And rather than 3 years, we'll say next all time high, which could be 2, 3, 4, however many years away, we don't know. But I will stand by the 3 decades. So price prediction for the halving, the next all time high, and in 3 decades.
All right. So the having, I guess it depends on what the ETF approvals look like. If it's an ETF approval, you know, you also have to plan for that, right? Like, what if the SEC comes out tomorrow and says there's no Bitcoin ETF?
Yeah, yeah,
Bitcoin will be okay. It's just that's a news event that will act as a catalyst in a bearish degree. Um,
yeah.
so at the halving, I really like 42 as the level based on the weekly cloud. Not knowing anything about the cloud, um, all this is telling you is the mean reversion of the current uh, retracement based on the previous cycle is the 50% level, and that's at 42,000. So that would make a lot of sense to me, and that would line up with previous halvings. If we go back to the COVID stuff, we were pre-COVID, at the mean reversion target of the previous cycle. In 2016, we were also at the mean reversion target of the previous cycle, right before the Bitfinex hack. At 2012, we were almost to the mean reversion target, right? So this is like a common, from a cycle to cycle perspective, it would make sense that 42 is the level.
Sorry to just intervene. It
Yeah.
always blows me away, the nature of markets, how everything kind of coincides and flows very nicely, because we've just released a new chart. It's called the Cycle Master, which is based on multiple on-chain metrics, the cumulative value of data destroyed, the terminal price, and a few others, which predicts a fair value of Bitcoin, which we are usually at the halving of $43,000. So close enough. And
Yeah.
it's always blows me away how you can either be a technical trader, rely on on-chain metrics, a fundamental trader, whatever it may be. And a lot of the time, the conclusions can actually be fairly similar. They're showing, regardless if you're looking at Fibonacci's or something, all things that line up and provide confluence. And if someone's looking at all of them or just looking at one of them, you can kind of come to a similar conclusion of 42, 43, $40,000 ish being a fairly decent idea for where we may be at the halving. Like you said, obviously the ETF is going to come into effect, and maybe we get some front running or a sell the news event. But I think it's a decent prediction for where we could be in 4 months, and definitely a realistic one. Not like some people that maybe say new cycle lows at 12K, insta run to 80K or something. Just a nice level headed, realistic approach, I think.
Yeah, no, 42 makes a lot of sense just based on the 50%. If you look at like Dow theory, okay, look that up if you've never heard of it and you're listening to this. The mean reversion stuff, that's it just happens so frequently, right? 47 is another level based on the volume that, it would make sense to me if we like wicked to 47, pulled back to 42, and like that was like the yearly high or something. That would make a lot of sense to me. But I do think we go higher from here. It's just a matter of when the news happens, if the news is positive. And so the other question was relative to halving. What was my target?
So we're going to say 42 at the halving.
Yeah.
So
Okay.
I'm going to go on record and say you're imagining a 32K pullback, a 47K wick, and a settling price of 42K at the halving.
That sounds good. I'll take it.
I would take that too. The next one was in 3 years, but we'll say at the next all-time high, where could you foresee Bitcoin's price?
I think 250 in 2025 just sounds cool. It's
That
kind of
does
like
sound
30.
cool.
It's kind of like 33K by July. I feel
Yep,
like
yep.
100K was kind of stolen from us in the last cycle through the Sam's shenanigans. Um, maybe I'm, there's an argument to be made that 3AC helped push this up in July of 2021, and I think there's another argument to be made that the rehypothecation of Bitcoin helped keep this down from going further in 2022. But there were other metrics that were also pretty divergent from price going higher at that time. So it I don't think that's the full story, but it didn't help that Sam was selling. I just say that because if you look at the sorry, let me pull it up. the long-term stuff we were looking at, right? Power law corridor or the investing, what do you call it? The investor tool?
Yeah, yeah. The MA multiplier, 2-year MA
Yeah.
multiplier. Yeah.
You know, just looking at last cycle's high relative to where this was potentially projecting on the power law corridor, you'd say, well, it's impossible to hit anything close to that this cycle. That's a fair argument. You could also say this thing was created in 2018 and needs to be adjusted, maybe. I don't know. But I just, I'm excited because we've never seen flows. We've never truly had institutional flows. We've had institutions on the sidelines like dip their toe into this stuff, but we never really had products that were institutional facing other than the futures ETFs. But the BlackRock ETF is going to be super low fee. The custodian is going to be super trusted for people. I don't know. I'm very optimistic that this is a really good shot at seeing crazy prices like that. And everything else is blowing up, right? Like if the bond market blows up and we go into full yield curve control, yeah, like things could get absolutely wild. Like
super cycle.
I don't want to jinx it, but you always want to let your runners run as well. That's another key trading lesson. So if in a year and a half from now we're at 270 and it looks like we might keep going, like I'm not going to close my entire, like sell my total stack, right? Like
yeah,
it's just dependent on the market, and this gives you a pretty good guideline along with all the other stuff we talked about today.
do you think I know decoupling has been a phrase for as long as I can remember, that we're going to see this decoupling and Bitcoin's going to be its own unique asset that isn't tied to the US stock market primarily. Do you think if we were to see a drawn out recession, if we do see big economies fail to really increase their liquidity to pump prices artificially higher, we'll say, do you still think we could see Bitcoin decouple and hit all-time highs that high, or do you think that would really dampen the upside potential? Do you think the ETF could be the catalyst for a decoupling?
Well, we're starting to see, what was it, Turkey, Argentina, there was a third country. Bitcoin's already hitting all-time highs.
Yeah.
We don't want to live in countries that happens, so we don't want to wish that upon any country, but that is like absolute end game where a lot of people think we're headed. That's like sovereign debt crisis or whatever levels of stuff. I hope we don't get there, but it looks like that's where we're headed if we don't get our house in order. And yeah, at that point, sure, right? If you want to, like, here's a crazy chart. If we look at Bitcoin against TLT, right?
Is TLT the 20-year Treasury bond ETF?
Correct. Yeah.
Okay.
This thing is very similar to those like Argentinian charts, right? Where it's like, it's pushing all-time highs, and this can continue to rise if Bitcoin outperforms TLT, or if TLT continues to decline because of debt issuance. So the charts like this like sell themselves for institutional folks eventually. Eventually they wake up and they realize, yeah, like I need some of this in my portfolio, like I need to protect myself against whatever's going on. Yes, it's volatile. Yes, it needs to be sized appropriately. Yes, there's headline risk, blah, 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 blah. But if you don't want to keep your job, you're going to have to incorporate this into your portfolios eventually. Look at the chart, right? How do you argue against this? And then, we can look at against the S&P. That's another great.
So just for people that maybe don't use these custom pairs, this is looking at essentially how many S&P 500s you could buy with one Bitcoin. So it's just basically seeing where's the most efficient place to park your capital. Rather than just measuring against the standard US dollar, we can see Bitcoin's appreciation in direct comparison to other assets. But I think they're very useful. Usually they're used for like ETH, BTC, or crypto pairs. But I think the custom pairs that you do, like you said, can really outline Bitcoin's price appreciation and potential against what traditional investors typically would use as a baseline asset.
Yeah, that's well said. Because look, let's be honest, most traditional investors, and I've been there, I've been on the selling side of for products of this like this. They don't want to talk to you. They think you're crazy. You know, they want nothing to do with this. They've seen the trial and they've seen a FTX blow up. Like,
yeah,
they kind of need some evidence. Okay, and I think this is super convincing evidence that this is like a no brainer as far as incorporating it into a portfolio. So yeah, all this stuff looks good.
Yeah. So final one then, 3 decades. Let's say
3 decades.
An
Well, hope I'm alive in
ultra
3 decades.
well,
Let's start
yeah.
there.
It's hard. It's obviously hard to predict, but let's say in today's monetary terms. So let's not assume there's rampant hyperinflation. Let's say in today's money, where do you? Obviously, it's impossible to say, but ballpark figure, you can give a range of millions of dollars. It's fine, but anything that you could potentially foresee?
I would think 500 to a million per BTC would be like the low end base case, assuming money printing, inflation, you know, assuming we see more of what we've seen for the past 10 years over time, right? Hopefully rates aren't zero forever. And there is a yielding instrument that makes sense because that's just a better world to live in at the end of the day. But if there isn't, then we go even higher, right? Like if, like you said earlier, if there's no place to put your money. Quick aside, I'm reading this book from 1588. Okay, it's about the Amsterdam stock. It's about the Amsterdam stock market. In that piece, this guy, he talks about, you'd think he wrote it today. I mean, all of the same trading principles and the same activities and behaviors, identical. Like that, it doesn't change. One of the arguments he makes in there is the yields at that time were at 2% on whatever was available to people to like rotate into. Okay. So his argument was like, look, it's better to just stay in the market and get exposure to risk than even bother rotating into 2%. Because the question a lot of people have, like, okay, you're giving these crazy targets. Like, what do you take profit into? You know, for me, it's going to be, I'm going to buy like real estate or a house or something, right? Like something physical.
Yep. A MacBook, Chromebook, sorry. Yep.
Yeah, a Chromebook, which is in the closet. I have to keep it. I can't get rid of it. Okay. I can't, it doesn't belong
it's the
in
most
a
expensive laptop you'll ever buy. Yeah.
It does not belong in a landfill. So I guess my point is, you know, it depends on the rate environment. It depends on how ridiculous the fiat money experiment gets. But if we truly hold the 21 million, if there's exposure for everybody globally, you know, if this isn't outlawed or whatever, which is going to be incredibly hard, if not impossible to ever do, you know, the sky's the limit, right? Like it's infinity over 21 million. Isn't that the thought process?
It's the meme of like Morpheus in the Matrix, where is at what price will Bitcoin be, and it's like one day we'll measure prices in Bitcoin. It's someday the price won't matter because that will be the base. That gets into more of a hyper Bitcoinization deal, which, you know, we're showing glimmers of, given the current macro environment. Obviously, it's still a bit of a pipe dream, but do you think someday that actually could come to fruition, where basically the price of Bitcoin doesn't matter because we do use that as the base for valuing everyday items? How much was your house? Oh, it was 5,000 Satoshis, or that's a cheap house. But do you think we could ever get there?
I mean, I hope we don't, because that's not a world. That's a world where like there's failures on so many levels. Unfortunately, unfortunately, that looks like where we're headed, you know? So it's just kind of, it's depressing in a sense. Like, you're not rooting for the end of the world by buying Bitcoin and hoping it goes up. To me, you're just like, look, it's the obvious thing. There's the world's falling apart, like this is
Even if
your
it's just insurance against that, just a small allocation is, at this point, it's riskier to not hold Bitcoin.
right. This is your escape valve. This is your insurance. This
Yeah.
is a way outside of the fiat nonsense, So yeah, I hope we don't see like 10 million per Bitcoin, because that's an ugly world, probably. That's an ugly, ugly world. But maybe it's utopia. I don't know. We'll see in 3 decades.
Yeah, we'll loop back to this. We'll do a catch up video, a recap in 3 decades,
Yeah,
and we'll see how wrong we both were.
sounds
But
good.
overall, I want to say thank you very much. This was a great chat, great discussion. It was great to have your insight on the charts and your technical experience and your approach to both long-term and short-term accumulation and profit taking, etc. But for people that, as I said, maybe weren't aware of who you are, where can we find you? Where can our viewers go and watch all your other great content?
Yeah, so I'm on Twitter at Carpe Noctem. I'm on YouTube at Carpe Noctem. And those
Can
are
I
the
ask
two.
the reasoning
Yeah.
behind the name?
I've always been kind of a night owl.
Okay.
So that's part of it. And the accurate spelling of Carpe Noctem was
I was going to
taken.
say because it's Latin spelled incorrect.
Yeah, so it's seize the night. But when I got the Gmail account, it was that was taken, and then
Oh, okay.
Carpe Noctem just became my online persona. Because my Twitter account I had in like 2009, and that was pre-Bitcoin. Um, anyway, so that's where that all comes from.
So
Just
Carpe Noctem. I'll link everything below and have it flash on screen and stuff anyway. But do you have any closing remarks, closing advice, closing thoughts, opinions, or anything?
no, looking to Bitcoin's a great resource. I've used it since the last cycle or earlier. At this point, you guys have been around doing great stuff, continuing to add metrics. So I'd love to see it. And I look forward to continuing to use it this cycle, because it's got some really good stuff all in one place, curated for people. And it's also got the email component, which is nice if you like sign up for the service.
Yeah,
If we're really trying to sell the service here,
I know.
email.
I had a full speech written out here of how I was going to boast about how great we are, but you've just done my job for me, so that's much easier. Thank
Yeah,
you very much.
yeah. No, but I love the site, definitely.
Great. Well, thank you very much. Thank you, everyone, for watching. I think that pretty much concludes it. So, yeah, this was our second look into Bitcoin chat, which I thoroughly enjoyed. And thank you all very much for watching. And I'll see you in the next one.